We've been talking about kind of the volatility in this first quarter all year, banking turmoil, rate hikes, a lot of other things going on. Your clientele, mostly high net worth individuals and families, how are you telling them to balance their portfolios right now? Are you more focused on equities or on bonds?
Great question. It's, gosh, what a first quarter it has been. You know, all leading up until March 8th, the market was really trading on interest rate outlook, speculation as to when the Fed would stop hiking rates, what the terminal rate would be. And yet we were continuously debating, will the market retest October lows? And we hadn't seen the volatility that's typical of a market bottom. And usually at a market bottom, something breaks. So as you mentioned, fast forward to today, we've seen Silicon Valley Bank, we've seen Signature Bank, Credit Suisse, and the like. Volatility spiked, something broke, and policymakers had to step in. So I am cautiously optimistic. I think that the market, I think volatility is here to stay. I think that the market could very well move lower before it moves higher. But I do think a year from now, we're positive in both equities and bonds.
All right, so you're really bullish. So that's you. What about your clients? I would imagine ever since Silicon Valley Bank, you've been getting a lot of calls, a lot of people asking you questions about their portfolio, where their money's being held, et cetera. You're also looking at a recent Bank of America survey that's looking at sentiment. Sentiment very low right now. What does that tell you about the environment right now and also for the next 3 quarters of this year?
Yes, Frank, investor sentiment is terrible. You know, all day long, I'm talking to clients. We're 15 months into a bad market. And particularly in the last couple of weeks, clients are really ready to throw in the towel. So historically, that's been a very good time actually to be in the market. So Bank of America released their global fund manager survey last week. And interestingly, pessimism is today, we have as much pessimism that we've seen at market lows over the last 20 years. Also, the retail investor, there is AAII, the American Association of Individual Investors, that looks at retail investor sentiment, and it's as bad as it was during the Great Financial Crisis. So it pays to be a contrarian. With that Bank of America survey, historically, when we've had this amount of pessimism, the market, the S&P 500, is positive to the tune of plus 15% over the next 12 months.
So, Lizzie, I want to bounce something off you. Our latest Delivering Alpha survey is out today. Among the questions we asked top strategists is which areas of the market they will be concentrating on in the second quarter. So take a look at the results. A third said high dividend stocks, followed by healthcare, financials, mega cap tech, and then energy. Energy was the last answer, 12%. Mega cap tech and financials both 16%. What do you think about this areas of concentration results for our Delivering Alpha survey, with more than a third saying they're focused on high dividend stocks?
I think that, so for our clients and as an investment management style, we are less focused on picking style boxes, picking growth, picking value. I think that high dividend stocks have very much been in favor with a lot of the macroeconomic uncertainty. For us, we're looking for companies that have earnings, that are projected to have earnings growth, that have healthy free cash flow. But I think there's opportunities both in growth and in value.
All right, let's get to your stock pick with the stock that you think is a strong or could be a strong performer for the rest of the year. It's UNH in the healthcare space. However, this stock has been one of the biggest drags on the Dow so far this year. Do you see a major turnaround? What makes this your pick today?
Yes, I think so. UNH is down 11.3% year to date. It's 9.4% of the Dow Jones Industrial Average. So as you mentioned, certainly has been a pull on DIA. But look at the stock closed yesterday at $470 a share. The consensus median price target is $5.99. So that implies 27.5% upside from here. It is twice as profitable as its peers. It has a free cash flow yield of 5.5%, and it's really been beaten up. So I think given the integrated model, I think UNH is a company that given the volatility in the market, you're really buying at a great price. That's going to be one of the best companies in that healthcare space long term.